just a disclaimer. I'm a big believer. I think Stretch is a brilliant product. We try to do the same structuring instruments for nation states like Stretch. But there is marketing around Stretch saying, we make Bitcoin money. And in the Bitcoin space, there are people that are kind of wondering, what is your view? Is Bitcoin an asset? Is it digital property? Is it digital Manhattan? Or is it money? And do you feel these instruments like the preferred squeeze out people from discovering real bearer Bitcoin? And I think it'd be cathartic for people to hear what your view is on that.
Yeah, it's a good point. I think the thing to keep in mind is our marketing is to the 99% of the people that don't own Bitcoin that don't want to buy it, right? So when we talk about uh, Bitcoin and what we're going to do with it, we're selling products, credit products to people that would never ever in a million years buy the Bitcoin. They just won't buy it. Either they won't buy it because it's illegal for them to buy it. They don't buy it because it's against their mandate to buy it. They don't buy it because they don't want to hold it. They don't buy it because they literally can't, that they don't have the ability to punch the button and buy it. So it's either technically impossible or it's just, impossible. So we're creating a product for them. And when we create a product for them, we need to market it in a package that they can buy. I think that the issue with money is the Austrian perspective on money and the JP Morgan perspective on money is a non-sovereign store of value bearer instrument is money. So gold is money, everything else is credit. A famous JP Morgan quote from more than 100 years ago in a congressional hearing. And I've said Bitcoin is money, everything else is credit. If you're an Austrian economist and if you're a Bitcoiner, then you would understand that that resonates with you and you would be 1% of the money in the world or 1% of the opinion. The rest of the world doesn't agree with us, right? The 99% of the world, they think that money is a zero vol pegged to a fiat currency. It's a money market or it's actually a stack of dollars. They think of money as the most saleable good, as a medium exchange unit account store of value, but in the fiat frame of reference. And it's not hard to point toward that. There's $30 trillion in money markets. And it's literally a regulated term. Like, for example, it's illegal to market your thing as a money market, right? Because it's a regulated banking term. And so the rest of the world has defined money as an asset pegged to a fiat currency in yen, euros, dollars, francs, pounds. That's how the rest of the world is. Okay, so when you're creating marketing, there's no point in marketing to people that are 100% invested in Bitcoin that they should buy Bitcoin because they don't have any additional money to buy Bitcoin with, number one. And number two, they don't need to hear that, right? Like no one that's 100% invested in Bitcoin needs to hear from me that they should buy Bitcoin. They would say, I already did that. So when we're marketing to the people that wanted to buy equity or wanted to buy credit or wanted to be invested in something different. So to the conventional institutional investor, we would position Bitcoin as digital capital because it's capital asset and it competes with real estate and equity portfolios and credit portfolios, other liquid instruments like that. So they think of it as capital asset. And then they would recognize STRC as a credit instrument. And there'll be a little bit of, some people think, well, it's preferred, that's not credit. Well, the truth is it is credit. It's just not a bond. And so they would view a preferred equity as a credit instrument, and we would deliver that. Now, in the fiat frame of reference, gold is capital. A gold-backed bond would be credit. and a instrument that was pegged to the US dollar, right, a note would be currency or would be money in a fiat frame of reference. And that's the world for the last 100 years. And that's just the way it operates. So when we think about how you grow the business, if you're going to grow Bitcoin from $1 trillion to $100 trillion, you can't just convince all the people that have invested everything in Bitcoin that they should keep investing in Bitcoin, because you're going to get a trickle of cash flows. You're going to have to go find $99 trillion of other money or monetary value. And sort of by definition, it's somewhere else. It's invested in real estate, it's invested in bonds, it's invested in the equity capital markets. And that's like a $1,000 trillion stack of capital, and we're 1 trillion, where that makes us 10 basis points, like we're 0.1%. So when you go get that money, you're either going to create a Bitcoin backed credit instrument like STRC, or you're going to create a Bitcoin backed equity instrument like MSTR, or you're going to create a wrapped Bitcoin backed fund like IBIT. And all of those are channeling capital into the Bitcoin ecosystem that they could not contractually, maybe they could not legally, they could not technically, they could not ethically, they would not economically buy the underlying crypto asset. They just wouldn't. And you can, the irony is always seeing people that are Bitcoin maximalists that get angry that we're actually that BlackRock is selling wrapped Bitcoin to sovereign wealth funds, or that we're selling amplified Bitcoin to an equity investor, or we're selling digital credit, credit instruments backed by Bitcoin to a credit investor. But I guarantee you, there's no one that buys those instruments that sold Bitcoin to buy the instruments because they didn't want to. It's like all the demand is coming from people that they say, I have a pool of money and I can't put it in the 40 vol crypto asset. And so their choice is put it in a money market or put it in a diversified credit fund. So we see the expansion as digital credit will allow us to tap into the multi-hundred-trillion-dollar credit market. And then if you can take that credit and create an instrument pegged to a fiat currency, if you can peg it to the yen or the Swiss franc or the euro or the pound or the dollar, and you can offer a spread higher than the risk-free rate, the conventional rate, then you will start to divert capital from the money market instruments. And we talk about digital money. What is digital money? Digital money is a Swiss franc that pays you 4% in a world where the fiat money is a Swiss franc that pays you 0 or negative, right? And we can debate semantics in the crypto community, but it's kind of irrelevant because all the money is not in the crypto community. The money is in the fiat community. So if there's $1 trillion invested in Swiss francs that yield 0, and you want $100 billion of it, you have to offer them a Swiss franc that yields 4%, backed by a digital credit instrument backed by Bitcoin. So, when we use the phrase digital money, we're creating a product to sell to the people that have the hundreds of trillions of dollars of fiat-backed securities or money instruments or credit instruments, because that's what they understand. And we use the word digital credit, we're creating a product to sell to people that have credit that is fiat-based, that they understand. And what is Bitcoin? Well, yeah, it is money. It's digital gold. As much as gold was metallic money, Bitcoin is crypto money or digital money. But it's also digital property. It's also digital capital. It's also digital energy. It's also, trust, digital trust. If you want to establish or authenticate digitally, how do you prove your identity without a trusted third party? It's one thing to transfer money without a trusted third party. It's another thing to prove that you're Satoshi without a trusted third party. The answer with both of those is using a public-private key combination. I mean, that's that, Noster approach this, and I think public-private key cryptography is a critical thing. But even with public-private key cryptography, the ability to anchor it into the most energetic, most secure global blockchain is important. So I think that Bitcoin is important to understand as a trust network, a monetary network, a capital network, an information network, right? And what is the highest best use? I think the market has clearly spoken that the highest best use is as for store of value or as a capital network. We have proven without a shadow of doubt that Bitcoin functions if you want to store your monetary energy for 4 years or longer. And the way we've shown it is like, well, we're moving $50 million a day. You're selling $1 billion a week of something, right? So clearly that's a killer app, but there are other applications, right? Medium exchange applications and authentication applications and the like. They're not nearly as valuable right now, and it'll be whatever it'll be. But our view is we'd like Bitcoin to become 100 times bigger than it is, and that means we need 100 times more money, and it's other people that have the money. And right now, they're invested in fiat denominated credit, equity, and monetary instruments. And we need to create products that appeal to them, and we need to market them with words that they understand. And the most important thing is get the money.